Today we're going to talk about the differences between profitable and losing traders. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to talk about the main differences between profitable and losing traders. Now, we know we've all heard the statistics, 95% of retail traders fail, and there's usually some really key reasons that show up repeatedly over and over again. And I know, because I've been guilty of a lot of them, and it really is a shift in consciousness and just awareness in terms of the main differences between profitable traders, whether they're retail or professional, and losing traders. So what is the main differences? Thing is, with retail traders, and most of us come to the markets, we want to make money, we want to be right, we want to take a small account and make as much money as fast as we can, and our main focus is on finding the holy grail of entry and exit strategies. You want to be able to enter trades all the time that are going to make us money. So they're always focused on the next trade. Losing traders are always worried about the next trade. They want to find the next best way to time the market and get in and without facing any negative equity, and be able to get out and make some money fast without taking any losses. The professional trader, or the profitable trader, on the other hand, what they focus on, number one, is risk management. And professional traders are number one, they understand the number one thing about any of their trades is that they have a 50% chance of being right or wrong. And so their main focus right off the bat is always on managing the downside on any one particular trade. Losing retail traders tend to take small accounts and over leverage and over risk on different trades. They might make some money, they might get lucky, but eventually at some point they usually blow up their trading account. The second biggest reason, or the second big difference between losing and winning traders, is that losing traders will tend to over leverage or bet too much on individual trades. The profitable trader, on the other hand, what they're focused on, second after risk management, is performance. And what I mean by that is that they want to find out how well are they actually executing their trading plan. They know that if they have edge in the markets, the next most important thing in order to produce that edge is to execute that trading system as flawlessly as possible. So they're constantly monitoring their own trading performance. They'll be journaling, they'll be reviewing their trades. Like Mike Bellafiore talks about this at SMB Capital, they will present their trade hypothesis in the morning in front of the team, and then at the end of the day they'll do a review of what they thought was going to happen and what actually did happen. How well did they execute? How well did they manage their trades? And then even after hours, they're going back and cataloging and reviewing and building their playbook with other instruments that showed up with their best trade setup. So they're constantly working at improving their trading skills. Now, number three, losing traders will tend to take small profits and big losses. Now, I know this, I've done that. I would go along and get 6 or 7 trades out of 10 profitable and then blow it up on 2 or 3 trades, because I'd get overconfident. I would do everything right, I would manage, I'd have the right position sizing, and then eventually I'd have a good string of winners, and I would take a trade that was completely outside of my trading plan, over leveraged on it, move my stop, average in with more, and then eventually take a huge massive hit to my trading account. And that's something that a lot of losing retail traders do. Profitable traders, on the other hand, they tend to look for trading strategies, or focus on trading strategies that will give them an asymmetrical risk reward. So the difference with that is that if you are taking small profits, there's an old axiom: you can't go broke taking a profit. That's not true. If you take small profits and big losses, you can go broke. The profitable trader, number one, they focus on risk management. They focus on executing their trading system flawlessly, but they look for asymmetrical risk-reward trading setups. And what that means is, like the turtles were a great example of this. They would be able to hit trade after trade after trade and take losers. But when they got into winning trades, they knew that all markets at some point would break out. They didn't know when, but they knew that there would always be 2 or 3 big breakout markets where they would make back their money. So they were quite happy to bet 1R, 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 get stopped out. But when they got into a trade and it moved 3R or 2.5R, they would add another position in, add another position in. Every time it moved up so many ATR. So they knew that on average, that when a market did go on a big bull run or bear market, that it would probably return about 10 to 1. And when they pyramided into these trades, 2 or 3 of those trades would make the bulk, 80 to 90% of their money for the year. So they were focusing on markets that were going to give them an asymmetrical risk-reward opportunity. So if they were betting 1R and getting 4R, 5R, 10R back or more, or 20R if they pyramided into trades, that's a massive return on a small bet. Losing traders will tend to bet 1R to get 1R, or they'll bet 1R to get a half R, or they'll bet 1R to get 2R. But they eventually will bet 1R or 5R and blow up part of their trading account. And that's partly because the way that the math works. And Brent Penfold talks about this. You need to understand the math. And you need to have a risk of ruin simulation on your trading results. So you can go back, and if your risk of ruin is above 0, at some point you're destined to blow up your trading account. So again, asymmetrical risk reward. Number 4, profitable traders are constantly monitoring themselves. So they're in constant awareness, like Mark Devine from SealFit talks about being the silent observer. You need to be able to step outside of yourself and actually observe how you're behaving. What's your emotional state? Are you excited about a trade setup? Are you excited? Are you getting in early? Are you taking on too much risk? What is your behavior like? What is your mental state like? Are you approaching this like a business? Are you focused on performance and execution of your trading system? Or are you hyped up because you think that there's a huge opportunity to make some money here? There's a huge difference between the master who's focused on the actual process of his craft versus somebody who's focused on the outcome, and they miss the steps in between. Losing traders, on the other hand, if they're right, they'll pat themselves on the back and say that it was their trading skill. But if they lose, they'll tend to blame the markets, or they'll blame the brokers for slippage, or they'll say that there was stop running going on, or they'll say that the markets are rigged and that you can't make money from trading. There's never any self-reflection on, number 1, risk management. They're just focused on where's the next best setup. Number 2, they don't control their risk. Number 3, they'll take losses, and so the next time they get into a trade, they get up a little bit of money, they want to take it off the table right away because last time they got burnt. There's actually no process management to their trading plan. So they're emotionally driven, they're results driven, they're all worried about the end result, and when it doesn't go well, they blame everything outside of themselves. The professional trader, the profitable trader, on the other hand, number 1, the risk management. They're focused on performance and how they can keep getting better. Just like the Olympic athlete, they're focusing on mastering all the small little disciplines about their sport so that they can constantly improve. And number 3, they focus on asymmetrical risk-reward strategies so that when they can take these trades, and when they're right, they're going to reap back 3, 4, 5, maybe 10R on that 1R risk that they had in the markets. And they review themselves, they monitor their emotional state, they monitor their trading results. They're always looking to how they can improve and sharpen their trading edge. So these are just some basic comparisons, but that's pretty huge just in itself when you compare the two. And I know it because I've been on this side of the equation before. And if you haven't done so, go to my homepage to get my 7-step daily routine for high-performance traders. It's an audio file. You can listen to it. Develop your own daily routine, your own high performance blueprint. Like Mike Bellafiore talks about, how good can you get? So if you're not forcing the boundaries for constant improvement, if you're not growing on a daily basis, if you're not learning from the markets, if you're not improving your own skills, you're probably going backwards. The professionals and the profitable traders, the successful people who have been consistent in the markets, never let their guard down. They're constantly looking to see how they can improve, extract more money from the markets, lose less on their losers, and they're not afraid to do the work to put it in to take the money away from the losing traders. So hopefully you got some value from today's video, traders. Keep working on your own skills. Where is it that you need to improve? Pick one thing each week, get better at it, master it, go on to the next thing. Trading mastery is a lifelong journey, and every time you get to the one level, the market will throw you a new curveball and help you learn and grow more. So stay disciplined, stay focused, focus on risk management, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.